And good morning, good evening, good afternoon, students and traders. This is FXFreedom broadcasting you live on YouTube. Happy Monday, everybody. And this is Forex Trading Course 101. Remember, trading is a learnable skill when we learn in the correct way the three pillars. Pillar number one is the market, pillar number two is the strategy. And talking about today, everybody, we have the title, What is your strategy part 4? And the third one is the big one, it's called the trader, everybody, more in the advanced course. And we are here right now, we finished Fibonacci's, right? And we are here now in the advanced module talking about strategies and systems and indicators, right? And also remember, you are going to graduate from this course when number one, you have your chart set up and ready for trading. Number two, you have your strategy in place. You understand why your strategy wins and why your strategy loses. Number three, you have a complete understanding on how this market works so you can make an educated prediction, long or short, for the week. Hello Allah, how are you? Also remember that 90% of traders lose money in the forex market worldwide. The streams are not trading or investment advice. The streams are for educational purposes only. You can follow me on YouTube. It's called youtube.com/c/FXFreedomFX. And for homeworks and questions, you have my Gmail contact, my Skype contact, and you can follow me on TradingView. That being said, everybody, type in the chat a currency pair that you want to check. I believe we were moving with Canada CHF last week, talking about entries, trade management. Give it a second. And Canada CHF, was it here? Up in here. This is the monthly chart. There you go, there you go. See, the text is still in here. The text is still in here, everybody. Okay, so something like this, right? And arrow out, circle out, arrow out, 1 2, right? There you go. Something like this, maybe. Hello Abdo, everybody, come on. Every week from week, you know, gold and crypto, FX, everybody. Okay, not oil, not gold, currency pairs. Okay, everybody. No, I'm not rude. If I accept gold, then somebody else is going to ask for oil, and then somebody is going to ask for S&P 500, and we are done. This is not going to be the Forex course anymore. Okay, fair enough, everybody. Talking about being fair. Moving forward, USD/JPY, very good. Moving forward, institutional trader approach. After building your strategy, you want to collect a minimum of 100 samples. A sample trade is a trade with 100% same entry, same trade management and trade exit rules. Why would you do this? Because you want to quantify the strategy's edge. What is an edge? An edge is a statistically proven fact that your strategy produces more winners than losers through time. Why sometimes takes years to a trader to become consistently profitable? Because every single time we change a strategy parameter, I'm going to put an indicator, I'm going to take out an indicator, you know, I'm going to use counter trend line breaks, I'm not going to use counter trend line breaks. Every single time we change a strategy parameter, we are changing the edge, so we go back to square zero, talking about the 100 samples. Okay, then we clarify to you that we have different trading styles. A scalper is going to have different entry rules, trade management rules. and trade exit rules compared to a day trader, compared to a swing trader, compared to a system trader, compared to a news trader, and lastly compared to a position trader. Observation: it's equally important to write, define what to do as what not to do. Rule: when writing our strategy must have black and white rules, not subject to interpretation. Ala, do you have your strategy in place? So, clone chart, Ala is asking for USD JPY, everybody. USD JPY daily chart. So, moving forward, right? Moving forward, talking about trade exit rules. Okay, trade exit rules. Trade exit rules. When defining our trade exit rules, we must define the two outcomes. Number one, rules for when our trade is a winner, and number two, rules for when our trade is a loser, and it goes time to time with trade management. Okay, everybody, trade exit rules. Today, what is your strategy, part 4. We talked about entry rules, how to enter, timing, candlestick formation, counter, trend line break, stochastic, MACD, EMA cross, super trend. Trade management rules, cancel and replace on the smaller time frame, 3 color systems on the smaller time frame. So let's talk about today about the trade exit rules. Okay, so I need to have a rule, everybody, what to do when my trade is a winner and what to do when my trade is a loser. Any ideas how to do this? Type in the chat, everybody. I want to hear from you what could be a rule for, okay, I'm going to get out as a winner. What would be an example? Freedom, help me. Everybody, I know this stuff makes sense. You must learn this. Okay, now Justin is in. Okay, let's make something. Let's have fun, right? Okay, so I'm going to put a super trend indicator, which is super cool, by the way. Super trend. Okay, high price and so not high price, we're going to do the close, right? Close price. Okay, so we have the super trend indicator and we are going to start to play with the Fibonacci's too, which we learned. So ABCD from here, ABCD. So this would be the A. Boss, do I need to use the Fibonacci's? No, this is up to everybody. There is no right or wrong. If you like the Fibonacci's, you can use it. If you don't like the Fibonacci's, you don't need to use them. Makes sense? So blue goes to blue in this example. Fibonacci extension and retracement. So this is the new sequence. A to B, A, B, C, D. Now green goes to green, right? Green goes to green. So we have a new Fibonacci sequence on USD JPY daily chart. Orala, did you want another time frame? One more time, green goes to green, so this is here, and extension, D high, A, B, C, D. Let's double check if there are no highs in between. No, there are not. One more time, ABCD, ABCD, right? ABCDs must be a high up in here somewhere. Fibonacci retracement tool, ABCD. And we are here right now, right? ABCD, Fibonacci retracement tool. So this was it, if I'm not mistaken. And this is our new Fibonacci sequence. Okay, everybody? Now, if you are using the Fibonacci's, what would be a rule to exit the trade? And remember, there is no right or wrong. Thank you for the thumb up, everybody. You're helping me and Dukascopy get in the ranks of YouTube, right? Because of the logarithm. What would be an example of a rule of a strategy when our trade is a winner? There is no right or wrong. Exactly the extension, right? So in here, you know, trade management rules, trade exit rules. I can write an example. So it's a rule of my strategy. I will profit take at the capital D. Make sense, everybody? Another rule, it's just a variation, there is no right or wrong. When the market hits the extension, I will close 50% of my position and let the other 50% run with the super trend indicator. Everybody, is this understandable or is it too difficult to understand? Type in the chat, everybody, yes, it's understandable, or type in the chat, no, this is too fast, too difficult. There is no right or wrong, but we should have black and white rules, not subject to interpretation. Somebody is asking, not on YouTube, on the other streaming platform, boss, can I use the EMA cross instead of super trend? You can do and use, everybody, anything you want. Make sense? Hedge fund trader Allah, is this clear? You can have one or the other. I will profit take at the D, or when the market hits the D extension, I will close 50% of my position and let the other 50% run with the super trend indicator. Allah says yes, very good. Okay, so what's the difference, everybody? What would be the difference? The difference, there is no right or wrong. The difference would be what? So the previous Fibonacci, right? We entered the market, okay? We entered the market, just an example of indicators, everybody. No, I'm not suggesting super trend. Everybody, you need to do your homework and you need to choose for yourself. Fair enough? Talking about being fair. You know, we are giving you different examples of different stuff. Okay? So, just an example. Let's say that we have entered here. Okay, this was our short line. This was our entry in here. Let's make this green, green, and like this, and like this. This was our entry. Okay, because of the market was making higher highs, higher lows, whatever might be the case, you know, so it's low to high, high to low, low to high, high to low. Okay, we said, okay, my stop loss, just an example, my stop loss, talking about the pattern that I'm trading, my stop loss is going to go down in here, okay? Just an example. So I'm trading the pattern called the short-term trend, just an example. Don't get biased, it's just an example, okay? So we entered here and I say this is my stop loss, or you can say okay, I'm going to trade the Fibonacci and my stop loss, risk reward ratio wise, my stop loss is going to go below the C, so it's down in here. Another example, and here is the question, boss, can I have or can I use both of them? No, you cannot, and you should not, and you must not. Make sense, everybody? If you are trading the Fibonacci, trade the Fibonacci. If you are trading the short-term trend, trade the short-term trend. Okay? Yes, trading is a learnable skill when you learn in the correct way. Mixing the stop loss of the patterns, this is not the correct way. Okay, everybody? Mixing the stop loss from both of them, this is not the correct way. So we are here, and just an example, right? So stop loss on the short-term trend and stop loss on the Fibonacci. See, stop loss on the capital C of the Fibs. Hello Julius, how are you? Okay, remember today we're talking about trade exit rules. Okay, now two different traders are going to choose two different trade exit rules. Okay, both of them are trading the same patterns. Okay, now the Fibonacci trader is going to go 1 for 1 and something, maybe not the best trade but still doable, agreed. And the short-term trend, and now it's going to go 1 against 2. Okay, now if I am a Fibonacci trader and I say in my strategy, which I'm collecting 100 samples, that I'm going to get out when the market hits the D extension, okay, then if my risk is just an example, right? Example, if my risk is 1% or 100 bucks, just an example, then my reward was 1%, a little bit more. So in this trade, with this rule, there is no right or wrong. I'm going to pocket $100 or whatever, just an example. Okay? But if I say, okay, when the market hits the appropriate D extension, which is up in here, I'm going to get out 50%, and I'm going to let the other 50% run, 50% of the position, then I'm going to profit take $50 or 0.5%, and I'm going to let it run as much as it can go, right? So I have 50, it's just an example of the numbers. I have $50 in my pocket, and if the market is rallying, the other $50 is going to become 60 and 70 and 80 and 90 until the market stops me out on the super trend indicator. Feedback, everybody. Is this lesson today too complicated, or can you understand this? Type in the chat, yes, I can understand, or type in the chat, no, this lesson today it's too complicated. Somebody's asking, what if the market reverses? Well, if the market reverses, you would be stopped out. There is no right or wrong. Makes sense, everybody? You need to backtest. Okay? Boss, I don't know what to do. You need to backtest. Why not moving stop loss? Allah, it's just an option. Everybody, great question. Allah is asking, well, why don't you cancel and replace? I can. Make sense, everybody? There is no right or wrong. But you must obey the rules that you are going to write. Make sense? Well, anyway, if I would cancel and replace, I would be stopped out in here, Allah. Okay, on this low. Okay, market made a hard high in here. I'm not sure which one was the first one, or maybe not, right? Maybe I would move forward. Okay. Now, some of you are already writing, okay, I don't know what to do, what is better. You need to, everybody, you need to backtest for yourself, meaning you must go on the chart, and this is just an example, okay? You must go on the chart and see it for yourself. Make sense? You must go on the chart and say, okay, if I am entering in here, this is my first trade. If I'm entering in here, just an example, if I'm going to profit take at the extension, how is going to this differ if I would profit take with the super trend? Make sense? And you are going to see that on this particular case, USD/JPY, if you would profit take at the extension, you would get out in here, and if you would profit take with the super trend, you would get out in here. And you would say, okay, now this is the first one. Okay, now let's readjust our Fibonacci. So green goes to green, right? This would be our next second Fibonacci. And you say, okay, if I'm entering in here or if I'm entering in here, it doesn't really matter, you know. What is better for me? It's better for me to profit take at the D, or it's better for me to let the winners run. And there is no right or wrong. You can put Heikin Ashi smooth on the chart, everybody. FX recent indicators, Heikin Ashi, do we have it? Add indicator, Heikin Ashi smooth if you want. It's similarly to super trend. Make sense? No, there is no right or wrong. You can do anything you want. But when the market reverses, it's going to hit first the super trend and Heikin Ashi smooth on the second. Okay. Oh, the super trend is better. No, sir. No, sir, everybody. Make sense? Just because the market is giving you this kind of results on USD/JPY, it does not mean that this market is going to give you the result on other currency pairs. Okay? You can profit take at the extension 100%. You can leave it open 50-50. You can also say, okay, once the market reaches my target, which is the extension, I'm going to leave it opened. Make sense, everybody? There is no right or wrong. Okay, what's the difference? The difference is USD/JPY daily chart is relevant, but if we go on clone chart and we go on USD/CHF, everybody, see what happened in here. USD/CHF, and Fibonacci, right? Fibonacci, let's open the Fibs. Fibonacci and USD/CHF. This is the first Fibonacci swing, green goes to green. Second Fibonacci in here, right? Now look in here, everybody, the first sequence already, right? Somebody, if you would say, okay, I'm going to profit take at the extension, you would get out in here. Agreed? But if you say, no, I'm not going to profit take in here, I'm going to let the super trend run, right? Would you win more or would you lose more compared to the trader who is profit taking at the extension? What's the answer? There is no right or wrong. You are seeing USD/JPY and you might be thinking, and it's totally normal, it's fine, you might be thinking, oh, you know, it doesn't make any sense to me to profit take at the extension. I'm going to let the winners run and I'm going to go with the super trend or cancel any place or EMA cross, whatever, right? Agreed? You might be thinking like this. But when you go on USD/CHF with the same strategy, and you must not close the trade because it's a rule, and this is the difficult part of collecting 100 samples, you must not profit take up in here. Okay, you must go with the super trend. And here somebody is yelling already, oh, but the market is falling. I don't care. A rule is a rule. And if you want to have institutions giving you money, capital to trade, you need to confirm the edge. And you are going to confirm the edge making collecting 100 samples. Does this make sense to you? Or it's quantum field again? How we say in Brazil, the nebulosa. Can you understand, everybody? A rule, it's a rule, and we as managers, we don't care. Oh, but the market is... I don't care. You said you are going to manage your trade or pocket the profits with the super trend. Now you must pocket your profits with the super trend. Feedback, everybody. Can you understand this, what we're talking about today? Those are advanced lessons. What is happening, boss? What is happening, boss? We are in the advanced module. This is what is happening. You are not a basic, you are not a beginner trader anymore. You are not an intermediate, or maybe you are, but we are in the advanced module. Some of you, next year, you are going to jump into the advanced institutional course, when you are going to learn the tools that hedge funds and investment banks are using for trading. So you are advanced in here. Okay? And we are trying to groom you into an advanced trader. Okay? So we have a straightforward conversation. Oh, the market is going down. I don't care. If you are going to take profit up in here because you are seeing the candle moving down, this is not a sample. Everybody, happy Monday, right? You love Mondays, everybody. Come on, you know, you love Mondays, right? Here is the reality of the trading business. Happy Monday, you love Mondays, right? The bomb is coming. I should not say this on YouTube most likely, but anyways, you know, the reality of the trading business, everybody, every single time that you are not doing your job as an institutional trader, meaning you have a salary, you know, you are on a payroll, you know, you got the warning, and three warnings, and then guess what? You are fired. Happy Monday, you love Mondays, right everybody? This is the reality of the trading business. Not retail, but institutional. Okay? You might know this, you might not know. If you are a trader in JP Morgan Chase, Citibank, whatever might be the case, and you are an employee, you have a salary, okay? You are on a payroll. Every single time that you are not doing your job, what is the job, boss? Execute the strategy to the teeth. Obey the rules to the teeth. Make sense, everybody? You got the warning. So here would be, you know, the hedge fund or the bank is giving you their strategy, and they're going to tell you, okay, manage the, just an example, but manage the trade with the super trend. And you get out in here with this bearish candle, okay, you close the trade. The manager is going to call you in the office and is going to tell you, John, first warning, John. Oh, but, and the manager is going to tell you, I don't want to hear it, John, you are on a payroll, John, just do what we are telling you to do. Can you understand this, everybody? You are an employee. They gave you a strategy which is time proven and tested. They know their strategy has an edge. And you, John or Jane, you got out in here because you saw the market going down. First warning. Second warning. Third warning, you are fired. Okay, everybody? This is the reality of this business. Okay? And as retail traders trying to become professionals, as retail traders, you are modeling institutional traders. Make sense? Yes, it's wrong changing rules. This is why we are telling you this is the institutional trader approach. After building your strategy, you want to collect a minimum of 100 samples. A sample trade is a trade with 100% same entry, same trade management, and same exit. Fair enough, everybody? Talking about being fair. You cannot say to your manager, oh, but the market is moving. We don't care. Feedback, everybody, type in the chat. Yes, I understand this, or type in the chat, no, I don't understand this. Shola is asking, can I trade two strategies so that if one did not give me entry, the other will give me entry? Shola, yes, you can, but you must obey the two different strategies rules to the teeth. Make sense, everybody? Okay. Everybody, here is where you are going, here is where you are not going to make it. Okay, so good news, bad news. Okay, good news, bad news. Good news. Good news first. Good news. We love good news on Monday, right? Good news. Good news first. Trading is a learnable skill. Trading is a learnable skill, and yes, you can have two different strategies. Ala says, yes, I understand. Good news, we love good news on Mondays. Trading is a learnable skill. Nobody is born a trader, you are going to become one. And yes, Shola, you can have two different strategies. Here is the bad news. Here is the, boss, I don't like. Well, there is no good without bad, and vice versa, bad news. If you are going to mix the strategy rules, you are going to be fired, Shola, fired. You are never going to make it. Why not? Because when we mix strategies, we are not collecting samples, we are not collecting samples, so we cannot confirm the edge. Everybody type in the chat, yes, I understand this, or no, I don't understand this. Shola, you have a great question. Everybody has those questions. Don't be shy to ask questions, everybody. As a matter of fact, if you have any questions, just type in the chat. Shola is asking, can I trade two strategies so that if one did not give me the entry, the other one will give me? Answer, yes, you can. This is the good news, yes, you can. But there is also bad news. If you are going to mix the strategy rules, Shola and everybody else, you are going to be fired. Okay, you are never going to make it. Why not? No, it's not personal. Why not? Because when we mix strategies, we are not collecting samples, so we cannot confirm the edge. Shola, can you understand this? And everybody else? Hedge fund trader Ala, hedge fund trader Abdo, hedge fund trader Julius, and hedge fund trader Shola. I want to hear from you, and anybody else who is online, type in the chat, yes, I can understand this, or no, I don't understand. There is no right or wrong. Somebody is asking, not on YouTube, on the other streaming platform, boss, if I have a difficult time executing one strategy, how can I execute two? Exactly. It's difficult. It's extremely difficult, everybody. So feedback, can you understand this? The second feedback, everybody. Which one do you prefer? Do you prefer to profit take, talking about the rules, everybody, do you prefer to profit take at the D extension, or do you prefer to profit take with the super trend? Ala says, yes, I understand, thank you very much. Shola, yes, I understand, thank you very much. And announcement, Black Friday, everybody is coming. Black Friday in the future weeks. Okay, if you are ready to come and to go, or to come into the advanced course, Black Friday is coming. We are going to give you 50% off. Okay. Oh really? Yes, really, but only for the Black Friday. Remember, you cannot come to the advanced course without this one. But if you have your chart set up and ready for trading, if you have a strategy in place, and no, you don't need to make money, okay, just build something, okay, just build a document, okay, And number 3, you have an educated, you have a complete understanding and you understand why you would say long for the week or short for the week. Okay, then you are welcome to the advanced course. Okay, everybody, we showed you in the previous week, we showed you the XLS strategy, right? Okay, if you want me to send you the XLS strategy to have a template, send me an email, okay? Send me an email to education@fxfreedom@gmail.com. Okay, send me a quick email, you know, something like, oh, would you be so kind and send me the XLS strategy to have the like a template, okay? Yes, everybody, don't bother, just build a document, okay? Don't bother, we are not asking, I mean, come on, right? We are not asking you to make money and have consistent winners, right? Oh, there you go. Give me a second. Skill, not this one. Tools, strategies. Where are we? I'm looking for a folder, everybody. Strategies, not this one. Students, strategies. There you go. Everybody, give me a second. I need to take something. Okay, sorry about that. Give me a second, everybody. Not this one. Okay. And somebody saying, your postman, it's always coming in the class, right? Yes, it's this. Can I trade 2 trading with different strategy? Allah, yes you can. Which pair that it most easy to trade as a beginner? All of them. Awesome wheel and own built quasi-quantitative method with overlap multiple be considered a pattern method? No. Osman, the answer is no. Okay, everybody, here I'm just showing you, you know, those are strategies from the students that are in front of you, you know. There are a lot of them, so don't bother here. Okay, just build a document on Word or PDF or Excel, whatever. Okay, but have the rules. Okay, everybody, build black and white rules, not subject to interpretation. Okay, so yes, just send me an email and I'm going to send you XLS strategy to have a framework or a template to work. Okay, now look in here, everybody. Some of you are going to come to the advanced course, the institutional trader. So have a strategy, build something, okay? And what is not a good rule? So rules must be black and white, not subject to interpretation. So bad rule that is bad written. Sorry for my English. Rule that's bad written, okay? I will close my trade. I will close my trade when the market gets near the super trend. See everybody? You can have a rule in your strategy. This is just an example. I will close my trade when the market gets near the super trend. Near. It's not a good word to describe the strategy rule. Why not? Because near is subjective to interpretation. For somebody near means 50 pips, for somebody near means 200 pips. But so this is a bad written rule. It's not black and white, and it is subject to interpretation. Same rule, okay, rule. So good rule, not subject to interpretation. Good rule, not subject to interpretation. Interpretation, okay. I will close the trade when the super trend changes colors. Okay. The one says I'm going to exit when the market gets near the super trend. The other one says I will close the trade when the super trend changes colors. So let's see how this would play out, everybody. Where is the... So in here, right? Okay. So you have the first Fibonacci sequence on USD CHF this time. And here the market hit at the extension. This is the new A clone, this is the new B. Okay. And somebody is going to say, well, I'm going to exit the trade when the market gets near the super trend. And somebody else is going to say, well, I'm going to exit the trade when the super trend is going to change colors. So we are here, and let's go on the 4-hour chart, just an example. 4-hour chart. Okay, talking about the super trend. And the market is here, 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 and bam. See everybody? Is the market near the super trend? Is the market here near the super trend? And if you say, well, I'm going to close the trade when the market is near the super trend, even if you exit right now, this would be wrong. Why? Because your manager could question, well, this is not where the market is near the super trend, here the market hit the super trend. See how it goes when your rules are not well defined, not black and white, not subject to interpretation? Or in here, right? Here is the market, and the market goes, you know, we have a bullish candle, doji, now bearish. Is this near? Would you close the trade? What is near? Or is this near? I'm going to close the trade when the market gets near this super trend. The word near, or this one, is this near? You know, which one is? But once you say, well, I'm going to close when the super trend changes colors, you would monitor the market, monitor the market, monitor the market, monitor the market, and monitor the market. Bam. Everybody, did or did not the super trend changed colors on this specific candle? Yes or no? Hello MHB, how are you? Type in the chat, everybody, did or did not the market change the super trend color at this specific candle? Yes or no? Second question, should you get out if this is your rule? Third question, is this rule subject to interpretation? For you to say, oh, I'm not sure if it's the time to get out, I'm not sure. Would this be the case? Shola is saying no, this is, yes, Shola says yes, the super trend changed colors at this specific candle. I'll let you. You know, do you have anything to doubt in here or be subject to interpretation? It's clear, right? The rule is clear. Do you have anything to doubt or be concerned or double guess? When the super trend changes colors, I'm out. So this is the candle, I'm out. And if you wait, everybody, for another candle and you exit on the second candle, everybody, here is the question. Would you get a warning or not from the manager if you would close the trade on the second candle? What's the answer? You should close the candle at this close, and you close the candle on this close. Would you get a warning from the manager? What's the answer? But why? Why? Because the rule is clear. The rule is clear. This is your job, everybody. This is what you must perform. This is what you must do. This is the job. And if you close the trade in here, you made a trader's mistake. You closed the trade too late. This was the close when you are collecting 100 samples. You closed the trade too late. Make sense? The manager is going to call you in the office and is going to say, John, why didn't you close this trade in here? Oh yes, but I don't want to hear it, John. The rules are clear and are black and white, not subject to interpretation. Jane, why did you close in here, not in here, Jane? Oh yes, but I don't want to hear it, Jane. First warning for John and Jane. We are having fun, everybody, but can you understand this? The importance of black and white rules, not subject to interpretation. Okay? Our time is up. See you back tomorrow. Remember, everybody, Black Friday is coming. We are going to give you 50% discount on the advanced course. Okay? Until tomorrow, stay strong and trade for freedom.